Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for the evening of Tuesday, the 21st of June, 2022, 6:45 p.m. Central Time. My voice gradually coming back. It's not cracking. I had to wait till yesterday. That's how bad it has been, and it's still not there. If I talk like I normally do, in my recordings, that can be 20 minutes, I have to stop, pause, drink some water, get back, and then do it. It'll come back. The doctors told me it would be a few weeks. So I'm fine. I appreciate all the medicine I got, all the nice letters you all wrote me, and I'm not going to keep mentioning this. So we walk in on a big rally today. Did it change anything? I'll give you my opinion. Bear markets get short covering rallies. It's that simple. But tomorrow you face a headwind, and the day after. Fed Chair Powell is going to speak in front of Congress. He's not going in as a sheep or a lamb. He's going in as what? He's going in aggressive. Hey, we have an inflation issue. If they drill him, did he get inflation wrong? He's already said it. He's got nothing to lose by saying it. And now he's got to say that he's going after it. Going after it, he has one big tool. And that tool happens to be what? That tool happens to be interest rates. Now, the problem that he's having, and there is a serious issue, and it's not getting enough press, psychology, the psyche of people that hire is coming into play. It'll even hit the service industry. What starts happening is you go, we seem to be making it without hiring all these other people. I can't keep hiring them. I refuse to keep paying these crazy wages. I'm getting squeezed from everywhere. And all of a sudden, what corporations do is they don't say they're not hiring. They just stop being aggressive about it. And as people go off the payroll, they quietly go, well, if we lose two, we'll replace one. We'll make do. Why? Bottom line. And they're going to get squeezed. I know you may not agree with that. That's what's going on. And you watch. You'll start reading stories about this. How do I know? I have been in this cycle. I've been a broker 53 years. Do you think I just let these things happen and didn't learn from it? The game doesn't change. The players change. The game doesn't change. So when I look at the metal markets, come on. Why would they be going up? Gold doesn't pay attention to war, and it doesn't pay attention to inflation. Therefore, until something makes that occur, the gold market already told you, anything in the 2,000 plus level, not 2,100, 2,000 plus. And anything down around 1,800 seems to be what we're caught in for the time being. That's simple. When I take a look at silver, copper, you know what we keep saying? Well, China's going to come alive and the demand will be there. Yeah, maybe. I tried to bring up over the weekend that I had a friend that was talking to his friends in Chicago, and this person he was talking to is a major, I can't put enough majors in front of it, trailer broker. In other words, they run a big trucking company. You see their name all over the highway from coast to coast. And they're saying that freight rates have been falling, even with higher gas, and that when they're dropping loads off, the warehouses are very full. Have the supply chains filled already? If that's a case to a degree, how much demand are we going to give China as they come out of this COVID? Not as much as you think. And possibly that's what we're seeing right here. I'm just looking for reasons why this market hasn't gone crazy to the upside. China lies. They said they only had 5 new COVID cases today in Beijing. Chicago is nowhere near that size. I guarantee we have more than 5 cases. If you want to believe them, fine. As you can see on the weekly chart of closes, market's still sinking to the downside. You're sort of adrift here. You're not going anywhere. It's very difficult to want to play gold when you get this type of action. The trend is down. You do have a pattern of lower highs and lower lows. The market is under, at least temporarily, the red line, the 18-day average of closes, and the 200-day is right here in this gray line. So the bias is to the downside. Resistance going to be around 1846.5. But I'm not so excited about going in and having the risk $15 in a market that if it goes down, maybe it gets back to 1816. It's not a very good bet. I'm risking as much as I can make. I've got other things I can do that look better on charts than that, at least in my opinion, but pressing me, trend down, bias down, momentum drifting and trying to turn down. Nothing at this point is bullish. Let's assume the market reverses and goes up and clears 1861 and a half. Maybe you get to 1870, 690, the upper band. I think you'd get a lot of resistance right there. The gold-silver ratio is decided to pull in at the 18-day average of closes, that's the red line, and just sit on it. In the silver market, you get more neutral than this. You're just drifting. There is a bear trend. It's at work. Lower highs, lower lows. Maybe you get to 21.14. It's pretty hard to catch that type of play in this. This is not a pretty chart. Trend is down. If you were to take out 21.97 in the July silver, I could get friendlier. Now, sooner rather than later, I'm going to drop out of the July silver and start moving to the next month. You know, some people will go to September, some will go to December. We'll see what we want to do. Copper market, all the way down. Could this be ready to start embedding? It could. I didn't see that coming. And the more I'm thinking about it, that's why I've been asking myself, why is copper that bad? Is China isn't in a lockdown per se again, and nothing's picking up. And I have a feeling I'm onto something there. The light went on when my good friend told me about what these truckers are doing, and depot upon depot. They go to these warehouses and they're brimming with merchandise. If that is the case, and I don't know, I haven't gone into every one, nor do I know what kind they're shipping, that gets interesting. We keep hearing about the shortages of everything. Maybe there aren't those shortages. I do see car shortages, but I also see you can get a car if you want it. You know, we'll see what happens through that. As we make our move now into this, let's go to the back up here to the platinum. Well, platinum's making a battle right here. If it can clear now the 933 level, it could be to the point where it wants to go back and fight at the 18-day average. It's very oversold. The trend is down. Clearing that 933 zone probably kicks the market up into the 960s, and it sits. I admit to the disappointment. I admit I don't like the short risk here. To get short, the risk reward's not making a lot of sense to me. In the palladium market, the trend is still down and you're oversold. Once you hit the Bollinger Band, you sort of drifted away from it after about 3 days later, that even drifted further, and just sort of sitting here. But none of the metals are bullish. I may not want to participate with my subscribers in the morning on the short side, but I'm certainly not telling them to be a buyer at this point. You need to get rid of the bear signals in order to do that. Then we get to the dollar index, which is trying to turn down. You have a pattern of lower highs, agreed? You have higher lows, though. So you got to always pay attention. You got sort of nothing in between. The bias is up since you're over the 18-day average. So if prices were to fall, I'd look for pretty solid support at 103.10. And I think the market would just try to hang in there at that point, not do a lot one way or the other. Now, you know, one of the things I love to do is in the mornings, start you off with a guide for what to do. I've already read honestly, by 4:30, 4:45 in the morning, I've read what's going on in Asia, what's going on in Europe. I've written about it. I'm giving you the headlines about it at 5:30 when I start recording a video that tells you buy here, sell there. I cover 40 charts in that for the futures markets. But those charts, about a third of them make up the ETFs because they're the DIA, the SPY, the QQQ, the TLT. And at 9 o'clock, after all the government reports are typically out, I come out and I record about 40 charts, and I rotate them as well on the spiders and the ETFs, giving you trade ideas, go here, do that. Today I was pretty aggressive. I was actually telling people to go short at the market on a couple of the ETFs that I like. So we cover that, get a game plan. Here's the stop, how you come out. Here's where the market is. If it makes its move to the end of the day, where do you go with it? How do you find out more? It's simple, folks. You go to our website under the keyword research, or you can follow me. Just take your cursor, move it up on the screen. You'll see an icon. It'll take you right into the research section where I explain everything in detail. I'm Ira Epstein. You have a good day. I will talk to you all tomorrow.